Hey man, say man, how was your day, man? It's favorite trader G. Come out with another video, man. We about to go ahead and get off into this, man. About to get in these charts. I ain't about to waste y'all time because I don't want y'all wasting mine. Oh, you feel me? Yes, sir, man. How you guys doing today? We about to go ahead and get off in these charts, man. Let's see what today gave us. Let's talk about it. Let's go over it. Guys know it's Fomc, so coming off the bat, we started off a little shaky. I guess this 30-minute internal really did do something. I usually pay no attention to like 30-minute internals, but for the beginning of the New York session, that's what caused us the problem. So what is an internal? An internal is a fair value gap, an inverted fair value gap. What are fair value gaps? Fair value gaps are 3 candle patterns, 1, 2, 3, with a specification between the first and the third, making sure that there's an opening between the first and the third. So 1, 2, 3, opening between the first and the third. 1, 2, 3, no opening between the first and the third candle. Not a fair value gap, fair value gap. So let's go ahead and get off into this price action, man. Starting off at 906, we already had an external high for the 2-minute, external low at 856, right? At 930, we broke structure to the upside. But see, I'm guessing, right? Because it's really the only thing that I can think of. I really hate mornings like this, and price action's just been wonky all over, bro. Government shutdown, y'all know how it is. But 15-minute internal, I mean, we could mark it out just to see what it looks like. 15-minute internal. So let's go. See, we got the 30, we got the 15. So now let's go to the 2 minutes, see what happens. So that's exactly what happened, all right? So you see how I'm able to know the reason behind something because we understand that everything in the market is internal and external. Fair value gaps, inverted fair value gaps, and highs and lows. That's all the market is reacting off of, right? So broke structure at 930. But I guess we came in contact with this 15-minute internal, which is like, I guess there's no other, and I guess that's another caveat to the exceeded edge model that I haven't had to use in a minute. When there are no internals in that way, well, we are at all-time highs, so that's why things get a little weird, and most people hate trading all-time highs, right? So we came in contact with this 15-minute, which caused us to go back down. So anybody who got in that buy, unfortunately, they lost their money, right? But as I'm looking at this going, we're coming from my son's doctor's appointment. I'm like, bro, there is no way that we're about to go down, right? Because I'm looking at the internals. I see that we have a 2-hour and a 1-hour here. Let me move that back. I'm seeing that we have a 2-hour and a 1-hour here. So I'm like, there's no way that this 15 minutes is going to cause us to go past this. And if it does, then it is what it is. But I've been trading long enough, man. You know, appreciate it, man. But I've been trading long enough to know that that's not how the market works, right? So for the people that got in at 9:30 off their break, unfortunately got stopped out, right? But that's because of that 15-minute internal. Once we made contact with that 2-hour, now 1-hour for the first time during the New York session, right? That's when so contact, reaction being a break of structure, execution. We entered in our trade and it gave us about 42 points before it ended up turning around, creating that BOS to the downside. Now ask yourself, why was that BOS to the downside created? Well, this was the all-time high, right? You see here? This was the all-time high, which I targeted for my buy coming out this 2-hour and 1-hour, right? We used this we saw the contact with the high time frame internal. We had the reaction, which was the BOS, and we looked for the highs to take out. So the all-time high is the highest external possible on the chart, right? So what happens when you come in contact with the internal? Contact, reaction, execution. Same thing goes for the externals, right? This is the highest external on the instrument. So once we went ahead, got in that buy, made it past the all-time high, you would then be looking for a sell to the downside. And again, yes, you can expect the expansions, but you're looking for that sell to the downside. And why are you looking for that sell to the downside? You're looking for that sell to the downside because we have satisfied the highest objective possible. Like one of the highest objectives possible. This is this represented for me the highest external on the instrument M&Q. meaning the all-time high. So once we catch our buy out of the 2 hour and 1 hour, contact with the high time frame internal, break a structure to the upside, then we made our way and passed the all-time high. All-time high being the highest external that you can have. We're waiting on that reaction. Contact, reaction, execution. So we made contact with the all-time high. We displaced above it, right? Meaning this is the new all-time high. So if I marked it like this, it will look like this. Thanks, love. This is the new all-time high. Then contact, high time frame external, all-time high, contact, reaction. Reaction being this BOS right here. We made our BOS, and that's why you're seeing price come to the downside now, right? And we really have no idea how far it's gonna go. I mean, we have these lows right here, and then we have all these lows right here. So if we're doing contact, the high time frame liquidity drawn from the internal would be the 4 hour, right? But we're making we're still in the uptrend, but we have broke down to the downside. And it's like today is FOMC, so there's not really much to do. $210 for the morning. I mean, it's a blessing, right? And I'm very appreciative for it, but it's not something that really excites me, right? We really need to be making more money. But I'm thankful to have the skill to be able to make this money. Yeah. Like I said, as you can see, we came in contact with the all-time high, right? Which is the highest external that you can interact with. We crossed it, right? We're gonna remove this for right now, though. Get this out of the way. We crossed it, came in contact with it, reacted from coming in contact with it, and it gave us about 41 points on that drop, right? So 41 points with, I would say, probably like a 20, about 20 something, almost a 1 or 2, right? You could have taken advantage of that buy, and you could have taken advantage of this sell down. And that's it, man. That's how you're able to make money before FOMC. I am going to be trading FOMC. I want to get some of that action. You know what I'm saying? So, hey, man, I know you're having a great day, man. If you guys want to learn how to trade like this, visit neverquitexceed.com, become a profit titan. We do this every day, man. If I'm being honest, it's been a little aggravating with all the weird price action. And again, nothing in the chart is random. The choppiness that you're experiencing in the market is due to many of the same groups of high time frame internal sandwiching price action. So when you see it chop, that's just because there's similar internals in the area. And we all should know by now, consolidation, manipulation, distribution. So make sure you remember that when you see consolidation. Don't fall for that first move outside of that consolidation. Wait for the reaction that it usually gives after coming in contact with the internal, man. So y'all have a good day, man. It's your favorite trader G. Come out with another video. Yes, sir.